All right. Hello, hello. Ah, all right. Welcome to my desktop. It's Thursday, and we're on track today with myself, Steve. For those that don't know, yeah, even though it might sound impressive, the fact that I'm user number 3. Let's see, Phil was number 1, Dan was number 2, and then Dan called me in 2003, and I said, "Yeah, give me an beta account. I'll check it out." You'd think I'd know more than I do. Yeah, there's a little bit of lag. Let me see how much lag there is. It sounds like the usual amount of lag. Nonetheless, I'm here and I've got my drawing tool and I see you in chat, RT. I've got the SPY up, and usually I just kind of start talking about the market. But just a reminder, if anybody was sent here with a specific question or a need for support, this is why we're here once a day. One of the traders will be here. Now, that said, if you were here yesterday, Dan, the CEO, is kind of taken over Wednesday, and lovely that he wants to take that day. It's definitely open for him to come in and talk about other things from a different perspective that people normally don't hear. So he'll continue to do those on Wednesdays. I'll continue to be on Thursdays. We'll have Andy tomorrow. But I'll generally just start diverging and talking about the market or my position. So let's get right into that. I'll wait for any questions if there's any. No hurry, no need. But look what happened yesterday. All right, I've been around long enough to see Fed market days usually kind of do this and then they go back up. We've all seen that on Fed day. Well, yesterday we didn't get that. And I had a bunch of positions down here in my position window. They're not there, but I was watching very closely, very intently yesterday, waiting for that bounce to come right about here that I kind of fully expected that we normally get on a Fed day. We didn't get it. As soon as I saw this, I said, "Nope, something's different. Something's changed. I don't need to read headlines. I don't need to listen to what people think." I bailed. I just bam, sell market, sell all, market, sell all, market, sell all, and I just bailed pretty much most of my positions by right there yesterday. And so, I'm still relatively happy on the daily. So what I'm telling you is the only position I have is cash, and that is a position, and it's a defensive position. I'm not short. I don't really want to be short. I don't really want the stress of any of it right now. The volatility has come back in, and whatever the Fed said spooked the market yesterday, and we got a very abnormal reaction. So that told me, from all the seasons I've been through this, that something changed. And you could have easily gotten up this morning and just started chasing the gap higher. That's probably the worst thing you could do. And we're just kind of getting confirmation now that this gap higher is slowly kind of just fading away. We're only midday, but if this market was going to rebound as quickly as it normally has in the past, I think it might have done so by now. So that's my positions coming into today for all 9 people watching. Um, Again, feel free to use the chat if you have any questions. I'll just keep talking about the market. So I'm looking at the S&P here. That's probably the best, broadest look. Andy reminded me yesterday that the Dow has been horrible for a while, and I didn't even catch that. It looked like the Russell 2000. So the Dow and the IWM are leading the weakness lower. Okay, the old school IW and old school Dow and the Russell 2000 have both respectively broken their 50-day moving averages. Whereas S&P is still trying to hang on to theirs by tooth and nail. And then the strength has always been in your NVIDIAs, Teslas, quantum stocks. Technology's been strong. And so the NASDAQ is entangled in the 20-day moving average, but still kind of struggling here midday. If I go back to the S&P, we look at the midday stuff. Oops, I don't mean to do that. We click that and reset it. And I'm just kind of focusing right here on this 10 SMA in the 15-minute. This is going to tell me all I need to know. The fact that we're way under this is very weak, but you could argue that's a very oversold condition. And at any point, given midday, we could try to fill some of that. But as long as we're under, look at just pinned under it going into the FOMC and then released. Very, very bearish. I don't want any part of this. So RT, how do you secure swing positions overnight? You just, you take the ones home that you feel comfortable. So there's really only one way for me to answer that. Let's assume yesterday that we didn't get that and we just got kind of the normal reaction and back in play. And there was no reason for fear. Well, I would have gone through each one of my positions one by one at 5 minutes to the close. And if I saw one in there that was going to close below a key level or close below a moving average, I'm going to take that last 5 minutes of the day to basically cull all the bad weeds in my garden. That's the only thing I can do, because once the bell rings, you're not getting out post-market. You don't want to be. You're hoping that no news comes out. That being said, I hardly ever take home biotech stocks or stocks that are waiting for FDA approval or some sort, because those are the ones that can get knocked down overnight, 60, 70% if they have a failure to get approval. And their whole pipeline was dependent on that one drug. That's no fun. I've been there. And so I learned quickly. Those are a couple of things that I can do, RT, as a swing trader to play as defensive as possible. Pull out the bad ones 5 minutes to the close, because that's pretty much they're showing you their true hand, which is to say I don't like to pound out of them midday either or early morning. I want to let the whole day play out as a swing trader, and I want to see what that closing candle looks like, because sometimes you get a nice big reversal. We didn't get one yesterday, but if we'd have had reversed big time and held back on, or midday, I should say, I don't want to get caught up in midday gyrations. Yesterday was an exception to that rule, and I kind of talked you through that, how I fully expected the Fed begin. The Fed basically took that rule off the table of me waiting for the close, because I don't feel like I could have. And in hindsight, I feel really good about what I did. Now, normally, like I'm saying, I wouldn't do that, but we had a Fed day and we had a major structural change in the models. And so you can't fight that. So yesterday was an exception to my rule of waiting for the end of the day to see the closing candle, because I've gotten out of trades in the morning only to see them reverse and be a big, long wick bottoming tail candle. And for days, it just makes me say, why did I get out midday when I like to wait for the end of the day? That's the true tell for a swing trader. I'm just letting support know to send anybody in here. Some of the names that were doing well were the A that I was in, that I cut yesterday, BBAI. Had to cut that right around there. What scanner would you use to find a candle with a big body and a big upper lower wick? Let's see, for a reversal. We can play with that. I might have a scan. Let me see. What was it called? It was called the washout bounce. Yeah, let me see. Because there was some structural filtering in here. Yeah, so let's go through the history. A lot of them are going to look like today. They're not going to have a long tail. Let's see. Your question was with a big body and a big upper or lower. So we're looking for the lower wick for reversals. And so let's quickly just look at the configuration before we start RT. Okay, so we're going to go in here. We're doing, okay, so it's a 5-minute high alert right off the bat. This is going to be an alert window that gives us a new alert every 5 minutes, but it's only going to show us, okay, position and range. I think that was a question of yours, the percentage filter. Yeah, position and range is today's range. So show me new 5-minute highs where it's at the 95th percentile minimum of today's range. But coming off of this, what's this? Today's range, 100%. This means today's range is at least 100%. And let me just, we can always go in here like, and we can go, I just want to show you guys how to get help sometimes. What was it called? Today's range. Today's range percent. Now, if I go and click help, it's going to open up a browser and understanding the today's range in percent. So this is what I wanted to see. It's basically going to say, it's comparing the range today of the average true range. So when we use a value like 100 there, it's basically saying the stock has had a mother of a range today. So there's our high to low volatility. However, if the thinking is, okay, the position within that wide minimum 100 range, right, is near the top and it's making new 5-minute highs, we're going to start getting ideas throughout the day that are showing us on the daily chart as big reversals. Let's see. Okay, so there's going to be a lot of things on here, but that's kind of the general thinking. And so I'm going to go back to just real time and I'll give you this one RT. That's the beauty of this session is we can kind of work through stuff. And then, I think it answers your questions. How would we look for something like that? This is just a starting point for you, but those range filters and position and range filters are going to be how you try to identify something. And then again, I'm using the event of a new 5-minute high. So it's constantly reaffirming throughout the day that it's moving through that higher end of a volatile range. What's up, Patrick? 100% cash, same thing here. Oklo, that thing was crazy. That's another one that I had to cut at the announcement yesterday. Cut that one right about there. No, that was today, excuse me. Disregard that. I cut this one before it got right out there. I said, well, this thing's heading back to lows. I'm not going to let it come back and test it on me. So a lot of things I cut midday yesterday. Rumble. Let's see what some of these things are doing. I don't want to be teased by any of them. Yeah, Rumble's going lower. And okay, this is what I see here. I see this is me getting out yesterday. Fail, 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 fail. This thing is just knocking on the ice looking for the crack. All right. And it's probably going to come down here to 7 or maybe even so with the winds changing yesterday with the FOMC, it didn't matter what I was in or how much potential I thought they had. Everything changed. I think that's a real big takeaway that I can share with people today as a swing trader with a lot of season behind him. I spoke to my friend Brian Shannon too, and I said, I think I got out as well as I could. He said, I think I did too. So both of us kind of recognized what was happening and kind of fell back on our experience that everything changed. Forget every little individual plan you had for all of these little individual stocks. Just get out now, because everybody's probably running to their computer as we speak. So that was my thinking yesterday. This is funny because if you'll notice, this scan here has been extremely quiet. And the reason is the design of the scan is looking for strong stocks that are pulling back to their 10 period. Let's take a look under the hood here. And the idea on this one, most importantly, is it's down today, all right, negative 1% today. However, the last few days, change in 10 days, it's up 4%. So we have stocks that are obviously trending up. Minimum up 4% last 10 days, down at least 1% today. And then here's the kicker. Change from the 10-day SMA. It's a bit wide, negative 0.25%, positive 0.25%. So I've got an envelope kind of resting at or around, we call it a cloud, I guess. The rising, it's going to be rising, 10 SMA. Well, given the market, look at that one just disappeared because it just broke down lower. You see that in real time, you guys? It just broke through more than 0.25% lower than my 10 SMA. So it dropped off the scan. The reason this is blank today is because there's just no stocks out there that have held up. Everything got jerked lower yesterday. So that's kind of another just true tell to me that I'm not interested in being Mr. Hero. Look at the NASDAQ is grinding back towards testing lows for a third time. SPYs, not so much. IWM, everything looks like, Rum did a minute ago. Everything looks like it's just a basketball bouncing on the court and it's looking for a crack in the ice. Jay, I'm not smart enough to call a top, but my account was just doing so well. And I just knew that at some point, when you start to feel like when the music stops and everybody's going to be looking for a chair, that could be a short-term top. But we had such a frothy euphoria. There we go. We got really, really ahead of ourselves. Price got really far ahead of the 50-day. And the last time that happened, it had to have a correction. You get up here and, all bets are off in terms of leaning on the gas super hard. And if you haven't made some good trades, fortunately I did. My account looks like this, thank God. But when you get to this point, you've got to be ready to pull the rug on yourself. And the question is a top in? Well, a short-term top is in, I can tell you that. And as I kind of went through the ladder here, if the S&P is going to continue to bleed, well, then our darling here, the NASDAQ, is going to have a date with the 50. And in the real scheme of things, is that a top or is that a correction? If we just come to the 50 and call it a day on the selling and the buyers show up again, that's not really a top. So I would call it more of a cycle. We're on the jump rope cycle of the rope is starting to head back down. Look at the intraday cues here. If you think you're going to jump in and be a hero here, that would have already passed. It would have been much earlier today. So the fact that we're just languishing here, put yourself in those people's shoes. They were disappointed by that lack of follow-through. They were disappointed by that lack of follow-through. And the stuff that they, maybe bought yesterday, or even worse, stuff that they want to preserve profits on. You're looking at hedge funds that want to preserve the profits that are left. This space becomes really interesting down here. So I'm not interested at all in trying to be a hero. I'm perfectly content in cash. If I was planning on shorting, I'd be probably doing it right now. But I only say that because we just got a signal candle 5 minutes ago of a red closing candle below this SMA. So if you're just kind of using this as a guide, you see how it's going, and it's starting to just kind of get heavy again and dry heaving again. Yeah, this would be a good place to short. Waiting for it to clear the new lows, you're always a bit late. So When you're shorting, you want to be an anticipatory entry, like this area here. But me, I'd like to wait until I start to feel a bit more heaviness below this moving average. And just, I'm not telling you to short, but this would be an area where I would, but I'm not interested in the volatility right now. I am much more comfortable just standing aside. That feels like a win to me. The percentage filter due in the candle pattern alert. Let's take a look. So if we go to search and we can drop down menu this one, you said candle pattern. So I'm assuming that candle pattern, and these are in fact alerts. So they're going to wait for the candle to close. If you want a 60-minute doji, it's going to wait and give you an alert every 60 minutes if it sees a doji based on the interior formulation. Happy to look at Nook. This is a freak of nature. You don't see these a lot, so it's kind of hard to analyze price action. Now, you've basically got 2 days of blast off and then a gap up today. I can tell you what not to do is to not look at day number 3 on a stock like this that's up 1,000% and say, I'm going to buy this gap up on day 3. I can tell you don't do that, because these are all the people who bought up here around 75 and then they've just been underwater all day. Yesterday's price action. Okay, let's look at yesterday's. I'm going to spread it out and we're going to go back to yesterday. Okay. Well, if anybody is a regular around here and listens to me, you know exactly what I'm going to say. This is why I use the 10 SMA on a 15-minute chart with no pre-market or no post-market. Gives me a clean look. And if you're somebody who's playing this thing, looks like here was the cutoff. So yesterday, right? Okay, you're watching. I certainly wouldn't be buying a 15-minute candle like that with that big wick. Look at all the space between the price and the rising 10 SMA. But I'd be saying, well, this thing could be in play. And you're watching. And all of a sudden, well, that's interesting. And then, oh, yeah, I missed it. Maybe you were on it. Maybe you were stalking it, but that could have been an entry. It takes a lot of guts to do that. But maybe you're watching another candle and it held again. And then it held again. And then you got a couple of 15-minute dojis here. All of a sudden, this is probably the A setup right here. This is probably the 5-star setup of the day right there, because you've got a condensed consolidation of price range consolidating above the 15-minute 10 SMA. That's your golden entry right there. And then if you really want to be crazy, well, a big volatile pullback, but look at where it bounced. This is your 5-star entry yesterday right there. And as far as gauging the momentum on something like that, I mean, I probably would have been out after 5 points. You don't anticipate another 30 points coming into that. So that's why I say it's just one of those crazy things that's probably not going to happen. Yeah, NASDAQ is not happy. NASDAQ just went green to red. Its SPY is still green, holding up. Russell 2000 is red, and the Dow is also above red. Okay, Lewis, can you pull up the tree map? Which tree map are you referring to? Is it on this screen or on the web browser or something else? I'm not really sure. This is a tree map right here, but all it is a tree map of shorts. So the only reason something is on here, and PRTA is up big, so it's got the biggest mapping. It's got 21% short the float, so that's why it's on here, and it's up big. So it's in play, but when I look at the daily chart, it's being really held up by its 50-day moving average, and still is so right here. So it's kind of falling asleep. I was talking about this one a minute ago. It just came up. We did get TSL. So as you can see, if you missed it, I'll show you real quick. This is showing me nothing more than stocks that are up over the last 10 days, at least 4%, and then pulling back into the 10 SMA. So it would be one of these right here. I mean, I can turn any top list. Okay, so we can take a top list. I can turn any top list and turn it into a tree map. And so this top list particularly here is nothing more than my liked symbols, my favorite liked symbols. And so everything, Oklo, I was in that yesterday, had news. So it's another way to kind of keep track of the stuff that you like to keep track of. Again, you can add anything to this list by clicking the heart symbol on the chart. Removing it is a bit different. Removing it needs to come into your account where you go into my watch list. And then you can look at, there's my liked. I can pull things out of this watch list if I want. Like if I want to get rid of ASPI, I can just say get rid of that one. So that's how you would manage. So any T window, which is called a top list, gives you the opportunity to show it as a tree map. So that's the way in which you get there. It starts as a top list. You see the T in the upper window here on the Windows app is going to tell you it's a T window. And that means nothing more than there's no alert needed. There's no new high or new low triggered. It's just constantly refreshing in the background and giving you the most up-to-date information. I'm going to turn that back into an old school map, kind of like that. There we go. Excellent. I'm glad that's what you were looking for. That's exactly why we want you guys to come to the live session. Eesh, yuck. Again, we make ourselves available once a day, every 24 hours at this 12 p.m. Eastern time. Now, in all fairness, I'm going to take a shot at the CEO. You might not get some of the deep technical support from Dan. He's too far downstream to remember stuff that he built upstream. But Monday, Tuesday, Thursday, Wednesday, we can help you a lot more with more detailed support. And that's the whole idea, because it's much easier than coming into the chat or an email back and forth, or having to have you send a screenshot. We can diagnose or figure this stuff out in real time, and then I can even share something with you. For instance, I can right click and I can share this tree map of nothing but short names. And you can right click on that and save that link or copy that link with a right click, and you just go to new, load from cloud, and you can load that scan directly from those links that I share, which is another great reason that we like to do the midday support sessions, because it's an amazing program. We can do anything with it. As I mentioned, Dan is downstream kind of helping configure the next generation of it. Okay, so how would I find something that's in a strong uptrend? Let's use this as a starting point, because this is in something that's in an uptrend, and we can even maybe mess with it, but we're not pulling back to a moving average, so we can cancel out our pullback to the 10 SMA. But let's say, let's add some more stuff to it. Let's say, add a position in 20. We'll add that filter. And then I also want to do change 20, change in 20 days. So we're broadening our filters to 20 days. So we've already got change in 10 days, 4%. Let's make change in 10 days, 20 days, at least 6%. Now what we have is a broader 20-day range. And since you're asking for the pullback on something, say 20 to 30%, we could use our position within that 20 and say, Let's see, it's down today, so that works. It's down today, but it's only down when we're at the position of the 20. Let's just use your numbers. 20 to 30% pullback would put it in the position and range of 70 to 80. So let's just say minimum 75, maximum 80. So we're kind of bracketing a window there. All right, let's just launch that and see what that gives us. Okay, gave us an immediate tree map. All right, so now what we're going to do is we're going to start focusing here on, the daily chart, and let's just kind of see what that gives us. The Qs actually look like they fit that bill. Okay, so probably going to get a lot of items. Okay, so there's a big pullback. So this is what we just scanned for, RT. All right, so things are pulling back. Okay, so here's a case where maybe we can say we don't want to see things that have been in a downtrend. So we need them to be above our 200-day moving average. So let's qualify that, and we can refine this. So we'll say 200 SMA, change from the 200 SMA, it's got to be above it. And by above it, I mean at least, a fraction of a percent. Now that'll change a couple things, and it really gave us a quality rather than a quantity. So now we can see, oh, look at that. RT, is that what you're looking for? Something like that? Look at that. I'm actually going to save this. Let's configure this and give it a new name. Strong stocks pulling back 25%, just as a round number. That's the name. I'm going to save this to my cloud. So I've got it. Save. Now I'm going to save and share with you guys. So I'm saving, copying the code, and perfect. I'm glad you're ready for it. So all you have to do is just right click on that link and then copy link address. And then from there, just directly, and anybody else watching that wants it, you go to File, Load from the cloud, and it'll be right there. All you have to do is just click Load. And there is my copy. And what I'm going to do is I'm going to drop that down there into the lower area. And I'm going to change this one back to my original. So I have both of them. I should have made a duplicate, but I didn't. But I'll pull out the 20-day stuff. And I'll add back. Keep that 200-day in there, and I'll actually tighten that up. 0.2 negative to the downside and 0.2 envelope to the upside. Okay. And I've got the new one that I made right there, if I want to look at it. Now I'll keep that in the mix. I'll do some tidying up here. You can put that on there. I'll do some tidying up. Save layout, default layout. Now, the next time I open the program, I've got all those changes that I just added. That's very important for a new user. All right, Mir, can you do a top-down analysis on any stock? Yeah. Give me the stock, and I'll tell you exactly what I think about it. But the more detail, like if you have a position in it, that helps me even more because I'll know what you're looking at or what you might be wanting to keep an eye out for. Sure. I just the free floating windows. I just did it right there. It's that little typical Windows button, and it throws it down here. And if I hover my mouse there, I can see which ones are which. It's just the Windows. I'll do that with price alerts. Sometimes the price alerts are on my other screen. You can't see it. All right, let's just check in here while I wait. Mirrors symbol request. when I have many, how do you minimize and max? Oh, all of them. I thought you meant individually. You do it from the toolbar. So if I click that one, it's going to take them all down. And then to bring them all back up, maximize. So it's all predicated on the maximize and minimize of the toolbar. What do you mean by intermarket analysis? I mean, we do have, like, if I was to take, BBAI and say, what are BBAI's competitors or AI's competitors? BB, oops. That's one way. This list is kind of spotty. It's based on, our data feed. I have a sector ETF here. This window here is basically just a top list. I could turn this into a tree map if I wanted to. And it's basically my way of looking at the market to see which ones are strong for whatever reason. Airlines are holding up the best today. So I will use that, but I prefer this one in my sort mode, change from the open. Everything's pretty much red. So if that's what you're asking about, that's what comes to mind. That's all I can think of. For the most part, everything else is kind of technical based on what you want to see. Do short-term bullish play 5 minutes after the open. Welcome, Jay. Well, to start with, you have a time, so we can use time of day filter and say, stop after 90 minutes. That's how you'd stop after 90 minutes. It does, Jay. I agree. The cues. So that's how you would filter, Joe, using a 90-minute ending, as you say, after 90 minutes. In terms of 5 minute, you could do a 5 minute opening range. See this right here, 5 minute opening range breakout. You could add that alert and experiment with that, and take off new highs. But with your filters, change from the close. These are all things that you can add that might not be helpful. Relative volume is probably definitely helpful, something like that. Even the minute volumes. But 5 minutes after the open, you're going to see a lot of activity, a lot of volume, and a lot of back and forth. I like to personally wait at least 15, 20 minutes because a lot of the decisions I make when I jump into something, just personally, unless you're really adept at seeing what's happening in the first 15 minutes, there's a lot of head fakes. You can get caught chasing a green bar and just see it reverse on you. So today the weakest is definitely the NASDAQ because they're just still under. S&P is trying to hold on. We can see there's definitely some defending of this level here. Oops, that's a horrible draw. So I'd be watching this level closely into the final hour of the market. See what happens. If it can hold this level off and then get back as close to that blue line as possible with as little as red as possible, then that might be a short term, at least a victory for today for the SPY, because we've really kind of just done nothing here. But I agree with Jay. The NASDAQ is the weakest of the bunch. And it's kind of got that look to it. Usually how those resolve. That's what he means when he says short-term bear flag. Let's see, DJT. That was a good winner for me. I had to get out of that one too, as much as I hated to. That's a good question. I have always avoided the IBKR live sim directly with them. There's just too many things that can jump up in the way and keep me from just simulating what I want to simulate, RT. So unless you have a definitive reason, I like to just use the Brokerage Plus in-house trade ideas paper trade model. Whether or not they're going to hold you back on a locate because it's a sim account or not, I don't necessarily know the answer to that. You'd have to ask them, I suppose, and you should be able to get an answer because you're paying them for data fees just to get that sim, the opportunity to do that sim. Hello, Chris. Yeah, on the recent downswing, my thoughts are I try not to read too much into it, but this is a 4-hour chart. All right, I kind of like the 4-hour crypto charts. Yeah, okay. So Bitcoin just gave up 100 again. You can see it was trying to hold 100 for a psychological support pivot, and it has given way. The only thing I can think of is it's an asset class and it's following the other assets like stocks. It got weak the moment the stocks got weak yesterday. The moment, the moment silver and gold got weak yesterday. The moment the SPY S&P got weak, it seems like the Fed just threw cold water on everything, and there was no hiding. Here's the ETF for Bitcoin. All I can say is it's correlated, and everything is run by computers and models and quants. And for whatever reason, they decided to sell crypto along with, looking at the inverse here. Yeah, there it goes. Yeah. They decided to sell crypto along with everything else. If it's computer driven, I don't know. I kind of was hoping that maybe it would be a safe haven, but there doesn't really seem to be a safe haven. If we look at the TLT ETF, I saw a lot of TikToks last night where mortgage brokers were looking pretty sad because they knew the pink slip was probably around the corner. And these are mortgage rates just going up. If you're not aware, the price goes down, but sends the rates higher. And this is the 20-year. So it's not a good headwind for the market, for the economy. I don't know why that's affecting silver and gold and cryptos. I'm kind of dumbfounded on that. I wish I knew. Chris, that's the best answer I got. Patrick's right. And once the dollar started ripping, everything just devalued, no matter what it was, no matter what asset class it was. IYR, what did the real estate do? Oh, real estate did not like that. This is the REIT ETF. So, if you missed me on the open, I'm in cash because I've been around long enough to know that what happened yesterday was not normal. It was a major shift of people's models, and there's a lot of money that has to be shifted around and rearranged. And excuse me, all bets are kind of off for the moment for the nice Santa rally that maybe a lot of people were looking for. And of course, when everybody's looking for something, it doesn't usually come. So I am so much more comfortable not trying to short, not trying to go long, definitely. I'm so much more comfortable just being in a position. Jesse Livermore, the greatest trader 100 years ago, and a return to the century, said most of the money he made was by sitting. And I think that comes in two fashions. One, sitting in the good winners and being patient and not jumping out to take your profits early, but also sitting on your hands when it's time to sit. And that's how I feel it is right now. So I am just completely comfy and content sitting on my hands. Andy's telling me he just bought some silver. What's he seeing? He's seeing kind of what I was talking to you guys earlier about, that 10 SMA holding the price, and it's doing so. But I don't trust silver. I don't like it below this 200-day moving average. There's not a whole lot I trust right now. Every single asset class got its butt kicked. So getting back to Jesse Livermore, some of the best ways to save money is to make money, is to save money and not lose it and give it back. And by sitting in a risk off capital OFF, that's where I am right now. That's my mentality. Yep, go fish. I am just content watching because it was a great move. I was making some really adding to my account all-time highs in the AI stocks, um, some of the quant stocks, and even before then, coming into October, November, SMR and NNE and Oklo were just so good to me that it was bound to end at some point. And I just feel like I've been around long enough to know I've seen people just press it much, much longer than they need to press it, and they don't give heed to the warning signs. And I caught yesterday's warning sign loud and clear. It works for me, whatever works for you guys. But like I said, I'm not interested in trying to set up shorts either. I'm just content being risk off after a really nice swell of surfing. All right, I'll be here another probably 8 minutes or so. I've got a developers meeting at the top of the hour I need a break for, but slowly people find their way in here. If there's anybody that needs help, or Mirror, you were going to ask me about a chart. I don't think I ever saw a symbol from you. Hey, David. Yeah, fishing. So that one was kind of more stocks and downtrends, but we're doing what he was probably what keyed your comment was hearing Andy say he's fishing, and that's kind of what his concept is. Yeah, of fishing for stocks that are down, and he did have a scan that had that name. So if I just went search cloud fish revenue growth fishing, well, he was looking at revenue growths too. So stocks that were in a big downtrend that had revenue growth, and look at this, the sucker's empty. It's empty, there's nothing in there. Sometimes trade ideas can tell you what not to do, or tell you there's nothing to do, is what I meant to say. All right, Tesla, let's look at Tesla. I was in and got out. Okay, so I assume he was in long and got out. Okay, so first observation, obviously, it's at a critical point, which is the 10 SMA on the big picture. However, I want to offer you this. It's weaker on the intraday picture. In other words, I'm not trusting this at the moment because when I zoom in, this is the 5-day moving average. You get 130 SMA on a 15-minute candle chart. You're going to get a 5-day moving average because it divides perfectly into 5 days. 130 15-minute candles is a 5-day average, and you can see how it's smoothed out. And what does it do? It gives me wonderful areas of interest. If I go back to the NASDAQ, or actually it was the SPY, I think, look at how it was just holding on to that 5-day moving average until it broke. And I mentioned earlier, that's a big deal that we're below it. So you told me that you got out, and I don't think that's a bad idea for the moment, because not only are you below still the 5-day moving average, it's still been walked down lower, and it's going to have a problem right here again at that level if it bounces up. So I think it may want to go lower. Tesla may want to come and test. Now, if the market continues to go lower, you have to look at the NASDAQ first. What is the Qs doing? If the Qs go and make a new low today, I would say there's a good chance Tesla might have a date with 400 again. And I say that because the intraday, the faster time period is very weak. That's very weak. This may have worked buying the dip back here and here and here, but it might not work here. That's right. You asked about energy. Let's do XLE. Ooh, that's ugly. Look at how it just gave way all the way back here. Never even looked back, and it's just breakaway gap to the downside, extremely bearish. It's got a date with this level here, so you could come to the bottom of that level and say, alert me trade ideas when XLE touches this previous low. Then I can observe the price action and see what happens. Now, if you're short XLE, that would be your downside profit target. If you were looking to buy a bounce in XLE, well, then you could look to be alerted. And then step two would be watch the intraday to see if you can get the moving average to start to curl back up and hold the price underneath. So you said longer term dip buy. So there's your play, Jay. Put a price alert in at this low and then observe the price that day. It might gyrate back and forth, but what you're going to want to see is this 10 SMA on a 15-minute chart flatten and turn up, and then go with that fishing, that bird in the hand, I call it, where the price action is all of a sudden supported by the curling 10 SMA. It's no longer throwing the price to the lows, right? I think it's all going to key on this NASDAQ. It's the one that went red the first, and it just looks like it wants a date with a retest of yesterday's low. Yesterday's low is I'm going to go ahead and put an alert in, just like I told you on the other one, so that I know that the market's at a critical level if it takes out that low right there of yesterday's bounce. Well, it's almost time to go. I can squeeze in one more question if somebody had a quick one. Ooh, new low in the NAS. S&P following suit. Yeah, looks like it wants to fill this gap. I'm going to put an alert at yesterday's SPY low as well, just for notification in the moment, so I don't miss the moment. But again, I am extremely comfy in all cash watching this market kind of deteriorate. So be careful out there. If you've got any stubborn positions, if you have to, wait and see what the close looks like. In case there's a bounce, you don't feel like you got out midday. I do that to myself a lot, but all bets might be off this time because of what happened yesterday at the Fed. All right, guys, I'm going to go ahead and sign off so I can get a 5-minute break before my next meeting. So you're welcome, Mike. Thanks. And I'll see you guys next time. Andy will be in here tomorrow. All right. I'm going to sign off. Take it easy, everybody.